This is a Supreme Court judgment on income tax. Section 43B of the Income Tax Act provides deduction of taxes from the profits and gains of business or profession. Excise duty is one such tax from which can be claimed as a deduction under the Income Tax Act. A company generally pays excise duty during the first week of every month for the clearances made during the previous month. While paying the excise duty, the SENVAT credit will be first adjusted and then the balance will be paid from the personal ledger account. Personal ledger account is an account in which every assessee has to make payment of money in cash, which can be utilized for payment of central excise duty. A company deposited money in its personal ledger account. It claimed deduction of the amount remaining in the personal ledger account at the end of the accounting year under the Income Tax Act. The income tax officer disallowed the claim, stating that the amount in the personal ledger account is not a tax, but which can be utilized for the purpose of payment of tax. Hence, the amount remaining in that account is not allowable as a deduction under the Income Tax Act. Matter went to Supreme Court. Supreme Court held as follows. 1. Depositing money in the personal ledger account is a statutory requirement. 2. The money cannot be withdrawn by the assessee without the permission of the commissioner. 3. The money remaining in that account can only be utilized for the purpose of payment of excise duty and not for any other purpose. Hence, the Supreme Court said, even though the amount in the personal ledger account per se is not a tax which can be utilized for payment of taxes subsequently, it is an allowable deduction under the Income Tax Act. Under the present Goods and Service Tax Act, instead of personal ledger account, an electronic cash register has to be maintained in which the assessee need to pay the amount which can be utilized for payment of GST. Hence, this judgment assumes significance in the context of goods and service tax. Thank you.